All right, now you get to have John. Let's welcome John Taylor. Thank you, brother. Before I let John go, because I'm going to let John have the stage here, I interviewed 4 national companies. It took me a couple weeks. Met them all, introduced them all. I learned their model, and this guy and his company, JRW, is very, very much in alignment with how we operate. Very, very much. They really, really care. They're really good at what they do, and they provide great solutions. And they don't sell anything. They give you options, right? He's not going to say, you should do this. Because I had guys who sold DSTs, and that's what they would do. They would say, no, you just do this, without asking any questions. So with that said, John, it's all yours.
Thanks, Dan. Thanks. It's fun to be here. This is the 3rd family reunion for me, which is cool. It's Dan and I have gotten to know each other really well through experience over the years. As he kind of described the interview process, it was interesting. We get phone calls from time to time from agents and brokers, oftentimes commercial, who are trying to understand, hey, what is the DST? My client is interested. They brought it to me. And so they'll go online and they'll fill out a form and they're trying to understand what it is. And we thought that was Dan, right? So we usually just put those aside, and we might get to them in a week or two. And typically, it's not the focus of our practice. Our practice is focused directly on serving the clients that are currently our clients, and then growing organically through relationships that we have established already. And so we happened to take Dan's call, and we listened to the mission behind what he is trying to do. You heard it in his voice, didn't you, when he picked up the book? And he talked about it being his life's work and why he does what he does. And it was like, we've never heard that before. Not from a residential agent. You know, we didn't know who he was. And it absolutely blew us away. And we are so thankful, Dan, to be a part of your life's work, an important part. And we, about half of you or more, stood up when you said, hey, we're a part of the Real Estate Planner Group. And so you have access to tons of trainings and teachings and learnings and Zoom, and you have access to Dan anytime you want. And it's really reasonable. Gateway into a really great playbook. And some of you in here are not planners, and so this is my opportunity to shamelessly plug something. And I won't shamelessly plug me, but I will absolutely shamelessly plug the real estate planner community. The content's unbelievable. And my goal today is to help you apply that really practically. And I'll say a lot of things, and I'm hopeful that you're going to write down and circle like one thing that you'll take away from this next 30 minutes or so that will change the way that you do business. That's the hope, right? You have access to knowledge and information through podcasts, and you're going to hear a ton of sessions. This might be your first of like a marathon of sessions this weekend, right, and into next week. But my hope is that this is really practical. The title of my presentation is Unlocking Inventory in Your Database. Okay, so Dan talked about knocking on doors, right? That's not fun, but there's classes on how to do that. There's probably classes on Facebook marketing or next door marketing. There's all kind of stuff. I'm focused on your database. So it's crafting a way to approach the relationships that you already have in a way that multiplies your sphere and multiplies your influence organically because of the knowledge that you have access to. I just want to be really clear and make sure that you hear me say this. I think I have a purview to say it. You know more, you have access to more information than any other real estate, residential agent or broker that you compete against in your local market, like for sure. So the people the clients who you want to serve, who need your help the most, are the clients that are getting left behind. They're just left behind by the professionals in your local market. And so if I can inspire you with something, I just want to inspire you with the fact that they're in your network today. Right, they're in your database today, and it's asking the right questions, and it's making sure that you're presenting yourself with the confidence that, hey, this knowledge that you have, if you apply it, you're going to change the lives of the people that you get to serve. I am a securities licensed registered representative. Therefore, I am under tons of compliance. This is just my point to say I'm not a CPA, I'm not an attorney, I'm not giving financial advice, and I'm not selling anything. Who am I? What do we do? For those of you who don't know me, I'm privileged to lead JRW Investments. We're a wealth management office that serves national real estate investors who are looking to transition from actively managed rental properties into passive income, institutionally managed properties or portfolios of properties. And we have been at this since the 90s. Our office started as a tax practice. We evolved into a full financial planning practice. In the early 2000s, we skinnied everything down. We sold the tax practice. We reduced the scope of our financial planning practice, not to compete with every financial advisor in the country, but rather to complement them and to just stay in our lane, which is real estate securities. See, in the securities world, there's this kind of bucket of alternative investments. Some of you may have a financial advisor who has that on offer for you, right? And inside of alternatives, real estate is like one of the 4 major alternative investments. So that's the only bucket in which we play. So if you have a financial advisor, if your client has a financial advisor, we don't disrupt that individual in their world. When I have a conversation with an investor, this is the path that I go through. Dan gave lots of good questions. There's lots of trainings. There's a book that you can read. But I'll just kind of tell you my approach. The first thing I want to understand about a real estate investor, if they're considering a transition in their portfolio, is their tax situation. It will come oftentimes. Andy Fisher, if you just raise your hand. We worked with a client of Andy and Jody's, a wonderful lady who dots her I's and crosses her T's and is very, very, very meticulous in her research. And we have a wonderful relationship with them. We got through the end of a process with her on one of her properties and recognized there is no capital gain here. Good news. It's a listing for Andy and Jody. It's no business for JRW. But good news, right? Good news for the investor. It helped her achieve the goals that she wanted. The tax situation is a really important place to start. And understanding, helping the client understand, Dan and Billy had a little engagement up here like, hey, does your investor know the tax situation? Well, no, they had to go back to the CPA, right? That oftentimes is the case. But what we have empowered you to do if you're part of the planner community is to provide an estimate. Right, you can say, well, it's probably about this. And if you feel uncomfortable with that, Diane Cook, who's with me today, she's from Deferred, who's a qualified intermediary that I work with primarily. She's our preferred recommendation when a client comes to me asking for, and also is a partner with the planner community, and Dan sends his business their way as well. She has a tool that you can use that's not yours, right? But what we're trying to do is give the client an idea of what is their tax liability if they were to sell. It's a really important starting place. And if you're in this room and you're skipping that, you're kind of off on the back foot, and you're going to have a difficult time adjusting to the objections that come. Just a general idea is good. Beyond that, Dan asked some pretty sensitive questions, didn't he, up there? Hey, do you have enough money to live for now, forever, based on changes that may come, right? What is some questions that I ask? What does this property that we're talking about represent to your total real estate portfolio, percentage-wise? I just want to know kind of what we're dealing with here and your background as an investor. That's an open-ended question that allows them to talk and feel comfortable. They may say, oh, I have a few other things. Okay, so this is about 25%. What would you say that real estate represents to your total estate or your total net worth? I'm sure you have retirement accounts, and you don't have to give me specifics, but just percentage-wise. Is it, and a lot of times my clients will say, well, it's like 60%. It's 80% real estate. And now you're starting to frame up, okay, how about the income that this spins off? Do you need this income for the life that you desire, is a Dan's question. For me, it's to meet your needs on a monthly basis to start, right? Do you feel confident and secure in where you are and in the future financially? I want to understand, we're borrowing the tax question from our historical CPA practice. We're borrowing the client needs, objectives, financial plans, goals from our former financial planning practice, right? But what are we actually doing? We're trying to get to know the investor. We're trying to understand the investor, and we do care, right? And that's what I heard in Dan's voice, and he is trying to compel you. Hey, if you just care, you can out-care everybody in your industry. Like, I guarantee that you can. Most people don't. That's not their starting point. That's not their goal. That's kind of, maybe not. What do we do from there? Well, we understand now what they have and what they need. We have a macroeconomic thesis. This is, if you want to be a part of the investor world, you have to have a very good understanding of your market, where you live, what properties are worth, you know that. What do properties typically spin off income-wise? single-family homes or properties that you would primarily be the listing agent or broker for, right? What are they worth? What do they spin off from an income standpoint? What's a duplex rent for? What's a single-family home rent for? What's an apartment rent for? Right? It's good to kind of have an understanding of that. What we have to do is we have to understand where are we in this business cycle and what's a good investment today? Is a good investment today blue chip office space in San Francisco? Yeah. Probably not, right? Did somebody think that that was a good investment at some point? Of course they did. And was it at some point? Of course it was, right? And so I could go through all these things: senior care, self-storage, multifamily apartment buildings, last mile logistics facilities like Amazon and FedEx. These are things that I have to know, right, to advise my clients. What do you have to know? You have to know your market, right? And that's something that's very, very knowable. From there, see, we're on the buy side. Y'all are on the sell side and the buy side. So you can kind of borrow my framework for the buy side of any sort of investor transaction. But I have to know, is this particular property a good property to buy or not? Right? Inside of that thesis, hey, I really like, pick your thing. I like senior care facilities. Okay, well, do you like this one on this address with this, operator and this type of tenant base? Like, do you like that one? How do you know the difference between one and the other? Well, that's the due diligence practice that we have. That's the cornerstone of JRW today. Right? The cornerstone of what we do today is we evaluate real estate so that when we make a recommendation to your client, to my client, that it's with confidence. Because as a securities transaction, right, underneath of this financial advisory kind of world, that client is my client for life, right? That's not a transaction for me. It's by nature, by structure, it's not. Every quarter, I get the performance report of the property. I can't control the property, right? Every year, I get the tax return for the client, and we have a planning call, right? So these clients continue to be necessarily a part of my world going forward, and there's accountability there as well. So by the time we get to a recommendation, which oftentimes is what people are looking for right away, like, hey, John, what should I buy? It's like, well, hold on. Like, who are you first? Let's get to know each other a little bit. This is how I work with clients. Okay, so kind of with that context, that's why I think Dan and I have a ton of respect for Dan and Julie and what they've built, because it's authentic and it meets a need, and that need is so valuable, and that need is mutually beneficial for everybody in this room. Like, what a cool opportunity that you have to make good money, to solve a real problem that most people don't know how to solve or don't see, right? That absolutely changes the trajectory of somebody's family. Dan said it a little bit, he'll say it more, but it's not just for the life of the investor that you're changing, it's the life of that investor's family tree, right? Like Tracy was up here talking about her mother, Carolyn, right? It's a really important conversation. Barry had this conversation with me in the break. It's like, it's not just the investor, it's the investor's children and grandchildren and. And if you understand, maybe don't raise your hand, but if you inherited anything from your parents that wasn't stocks or bonds, if it was real estate or some sort of other asset, it's difficult to break a house in half and give it to like your favorite child and your least favorite child, right? So there are things inherently about estate transition that you are equipped to teach and coach and guide and produce seminars for and strategy sessions for your market that people are just not hearing from anybody else. So where are we? How did we get here? Moving on into, I think, what is applicable to you. Dan talked about this, so I'm not going to stress it. We're right at the beginning of the largest wealth transition in the history of the world. Okay, so the wealth that today's 60-year-old and over control in lots of asset classes, but we're going to talk about real estate, is an enormous opportunity and problem. And we'll talk about that. Like $23 trillion is going to transition in the next probably 15 years. And I think it's like 73 trillion in the next 30 years or something. There's all kind of numbers out there. But I think all you need to really take away from this slide is like the senior community is worth investing in. Not because you're going to make money at it, you will, but because they need your help, right? Most of these people, they didn't inherit anything, but they're about to create a significant problem and opportunity for the next generation. Here's a slide that I like to show for a couple different reasons, and I'll kind of harp on one. So this is housing transaction volume by for single-family homes by year, and it goes, this is really small, it goes all the way back to 1989. Okay, and so you can see, you probably felt this. Those of you, how many of you have been in real estate since 1989, selling real estate? Okay. So you guys have felt this, yes? You felt when sales volume was really low, it's hard market, right? When sales volume is really high, also hard market, but different kind of hard, right? So here's what I kind of want to, I want to draw kind of a parallel between that pie chart I just showed and that, hey, where have we been and where are we today? So moments matter in an investor career. We talk about, hey, was it a good time to buy blue chip San Francisco office now, or was it at some point? When was a really good time to buy single family homes in the US?
2011.
Okay, all those circles, right? It was when people couldn't buy, right? So you can, I'm not going to have a conversation about that last circle, but you can extrapolate, right, on is now a good time to buy real estate? I think you could make a case, yes. Okay, but you could absolutely look back in history and say, who bought real estate during that first circle? How old are they today? 1990, 91, 92. How old are they today?
65.
They're older than that, probably, right? So when did you have money to buy extra rental properties, right? We're talking about investment properties here. A ton of people who I talked to, they bought their portfolio, and this is a great question to ask, by the way, if you're writing stuff down. Hey, when did you buy this property that we're talking about, right? Now you know a couple things. You kind of know tax basis, you kind of know depreciation, but you really know value, don't you? Oh, you bought after the recession. Interesting. Tell me about that. That was probably worth a lot less then than it is now, right? And in some markets, like I'm in Los Angeles, so I benefit from like this huge volatility swing. And I think everybody would say you're up and to the right from 2010. But that's where, so 2010 was 15 years ago. So I would say people in there, who has money to buy extra homes? The 40-year-old? 45-year-old maybe? 50-year-old? 55-year-old? 60-year-old? So how old are they today? Right, so they're 75, 80, 70, right? All of these homes have a massive problem called capital gains tax. And most people, like Billy's client, if you were to ask them, what's your tax bill? They're like, let me talk to my CPA. Now they're gone from you, right? Now the CPA's got all kind of other thoughts, and they need to go to their CPA. I'm just saying the conversation can keep going with you, okay? So I want to compel you that it's a population worth investing in. At JRW, we have kind of this initiative called the 4 Disciplines of Execution. It's 4DX. There's a book out there, you can read it. It's a kind of a sales-focused book, but the premise is this. It's like, what could you, if you carved out X percentage, we'll call it 15% of your time, if you just carved out 15% of your time, what would make the most material difference in your business in the coming year? Right? Everybody wants listings, right? Listings will make a big difference. You're in control of way more if you own the listing, right? However many you had last year, what if you had 15% more? Or what I would suggest is if you invest 15% of your time or more in this segment, you're going to materially create more than 15% more listings, right? I would love to I would bet on that with you. If we could hold ourselves accountable with transparency, I would put significant dollars down on that bet. Yeah, that's only good in Portland. I think you can spend that.
Don't spend it.
So here's the way that I think about it, and I would love for you, if you don't have a way that you're thinking about it, just steal this from me. I think it will help the world if you steal this from me. And this is very much in parallel with Dan. By the way, I'm going to make all these slides available on that QR code, so you can write down whatever you want, but you'll get the slides. I think this works. The senior adult population, if you do this wrong, you come off as like really slimy, gross, right? Like you don't want to take advantage of a vulnerable population. Absolutely not. No one is suggesting that you do that. And so you're always putting the client before yourself. Like as a securities person, I mean, everyone in this room is a fiduciary, right? In some capacity, like you're supposed to do that. You've all probably seen peers in your industry who don't. So here's just kind of an acronym that you can think about. So who's the motivated seller? We've talked about this population already. They're approaching retirement or they're in retirement. They own multiple properties. They have a problem, either an economic problem or a lifestyle problem. How do you find that problem? You initiate a conversation, Right? This isn't like a talk track. It's not a flow chart. You're just putting the client first and understanding a little bit more about them. So good questions to ask. You're driving the conversation with questions. You're like in line at a coffee shop. You meet somebody at a party. You're introduced by somebody else. Hey, what's the first investment property you ever bought? It's an easy question to ask, right? What's the first one you ever bought? How did you buy that? Oh, it was a home that you lived in. So you didn't sell it when you moved. Why did you decide not to do that? Just curiosity, humility. You do this enough, you hear a lot of the stories start sounding the same. Okay, that's an easy question to ask. What's the first? What's the best property you've ever owned? What's the best deal you've ever made? That's a fun one to talk about. Right? Some people, Dan talked about, there's like the 4 quadrants of investors. I forget all of them now, but the reluctant investor might say, like, I don't know, I don't really think about my properties. But some people will say, hey, I bought this property for $16,000 and now it's worth $1 million. That's a pretty crazy return, right? So it's a conversation that you don't really have to bring much to the table except humility and curiosity, right? And then the transition question, what's the hardest property that you've ever owned? And if it's not one that they own today, it's like, well, what's the hardest property that you have today? Right? So what have you identified? You've identified a ton in that conversation. You probably have talked for 10% of the conversation, right? So if you're intimidated by investors, don't be. These investors, they're in a black hole of guidance. No one's talking to them about their stuff. They don't have peers necessarily who they're like sitting around bragging about their investment properties. They're self-made, blue collar, quiet, humble, multimillionaires many times. Okay, they don't really even realize what they have or what the potential of it is. Reframe the relationship. When you're approaching them as a real estate agent, okay, that's one way that you're framing the relationship. I'm suggesting you reframe it and say, I'm a part of this cohort inside of Keller Williams that they bring professionals in from the outside who are not agents to teach us the financial planning components of what our clients are thinking about. Because what we realize is that for real estate investors, the real estate might be 50% or more of your net worth. And I just have never found a cohort, a community, a class that equips us to help you manage those transitions, right? That reframes the relationship, doesn't it? Yeah. Right, massively. And you can say like, hey, I'm certified in this stuff and whatever else. That sentence in a conversation, well timed, is true. Okay, it's really true, and it reframes. So what are the things that you're trying to get at, right? As you're initiating the deeper conversation and reframing the conversation, you're not selling anything. You don't really care at this point what happens yet. You don't know enough. You don't know that they should sell it. They shouldn't feel that from you. You don't know that they should keep it. They shouldn't feel that from you either. They need a guide, and I guess I'll continue to harp on this. They don't have one. They don't have a guide, right? They'll call people like Diane and ask her for advice. They'll call their CPA and ask them for advice. They'll call, I don't know, whoever, and ask them. They're looking for advice, and they don't feel like they can get it from you because the last experience they had was 2 days ago when a realtor called and asked if they're ready to sell their property. And they're like, ugh, I'm so tired of answering those phone calls, right? So you show up differently. You already are. You have to have a solution. So if you understand the problem, you understand the opportunity, you have to have a solution. We'll talk about this in a little bit, but presenting all the solutions is important. Your client had a solution, 1. You want to have 5. It's like, that's a great solution. You're always agreeing. I agree with you. And have you considered? Right? Here's this. And have you considered? And what they'll recognize is that at least one of the solutions is not profitable to you, right? Like Billy's solution could be, yeah, keep it. That's exactly what you should do. Based on everything I've heard, I think you should. You should feel really good about that. Obviously, there might have been some questions through the conversation, and then with confidence, you can support where they already are. Or perhaps they're missing. Our friend Mike Hardy, who's with Ethos Lending, used to be Churchill Mortgage, he says this all the time. There's the world that you know. There's the world that you know that you don't know. I don't know anything about physics, and I know that I don't know about physics, and some people do. But then there's this whole world that you don't know that you don't know. It's a blind spot. And that's kind of what you're doing in that conversation. You're like, oh, yeah, I agree with that. And have you considered this, this, or this? Because I'm an expert. I help clients all the time navigate those decisions. Okay, so, yeah. Yeah, there's 5 solutions to every problem. They have one in their head. They certainly have never heard of one, and there's some in between there, right? You don't disagree with the client ever, right? It's, oh yeah, that's a really good perspective. And have you considered this other thing? Right? I used to fight with clients, like when I started out and I wasn't sure, like I thought I had like the silver bullet, and I would try to argue with clients to get them to do the thing that I thought was in their best interest. I would advise you not do that. Okay? You might already know what you think is the right thing for them. Don't tell them that thing. Help them get there, right? Help them get there through questions. All right. What problems could they have? This doesn't work. Here are problems that you can think about. Yeah, you just want to, I'll just talk through them. You can just put them all up on the screen, Kyvie, if you can. There's like a few. So what problems could they have when you ask them, what's your hardest property that you've ever had? Oh, cool. I gotcha. Boop. What's the hardest property that you've ever had as your transition point? And that's where you can add some expertise, because you've seen hard properties before. You've seen way more than they have. They only own, 10. You could talk to 10 investors tomorrow about 50 properties, right? Like, you are the expert at the thing that they're doing from your position, right? From your purview. So what are problems that they could have? Cash flow, right? That could be a problem. Are you making any money? Carolyn stood up here and was like, hey, what was she making? $1,000 a month? Something? 2,000? Whatever it was. And now they're making, 50 grand a year. It's like 4x their cash flow. So the cash flow was a problem, right? You're thinking about the solution, you're strategizing the solution, but you want to understand the problem first. Appreciation. Some markets like mine in Los Angeles, appreciation was insane for the last 15 years, and it's starting to level off. What has happened to rent? It hasn't kept up. Right? It's a conversation that you can have. The rent, when you bought the property, was way more relative to the value than it is today. Right? That's the cap rate conversation. Unpredictable expenses. Have you ever had HVAC or plumbing problems in the home that you live in today? The home that you raise your kids in? Right? Have you ever had an issue that cost you money? Yeah. Well, that happens like times 10 if you own single-family rentals. Right? So that's an easy place to go in the conversation. Unpredictable expenses. Non-paying tenants. Los Angeles County is very difficult for that. It's an easy conversation. There are probably other markets where tenant-landlord relationships are a little bit imbalanced from a, legislative standpoint, let's say. Insurance costs are up everywhere. Property tax costs are up everywhere. Everyone loves no income tax states. Who's Texas, Tennessee, Florida people in here? Right? How are your property taxes doing? Yeah, they're high. They're high. Lifestyle. Okay, remember, we're talking about seniors, right? What changes have they already gone through significant? Are they retired, right? Are they not relying on their W-2 income anymore? Did they have what was your job is a question I ask a lot. Where are your grandkids living? Are they local to you? My kids live in California. My parents live in Cleveland, Ohio. My parents have a geographic problem with their grandkids, and they have a rental property in Ohio, right? They have a problem that I'm identifying that's a lifestyle problem. Their time is worth more than money. You can trade. I heard somebody say this yesterday. I thought it was great. You can trade time for money, right? That's like a job. And I'm going to work for $30 an hour. Here's my time. I'm going to get money. You cannot trade money for time, okay? And a lot of folks, I think, in this population, they value their time a lot. And then the biggest black hole of them all is estate planning. The estate planning component is massive because, you'll find people who don't have a trust. You'll find people who never inherited real estate. You'll find people who have more than 50% of their real estate, of their everything in real estate, and they don't have a plan, right? A wonderful, wonderful referral relationship for you is the estate planning attorney in your local market. Okay, they haven't heard you and your competitors show up like this in their office before. Hey, let me tell you about this group I'm a part of at Keller Williams, right? It's taking outside professionals and teaching us how to think about real estate as the most important financial asset for my clients. What I recognize is that my clients don't have a transition plan that makes sense or that their kids can understand or that they understand, and they need your help Mr. and Mrs. Estate Planning Attorney. Can we partner together and do some seminars? I'd love to introduce you to my clients. Who's going to say no to that, right? No one will say no to that. No one shows up like that. Reframe the relationship. This is everything that real estate planner community teaches you how to do. I'm not going to teach you how to do today. What is the value of your deferred capital gains? Right? What is the tax liability if you were to sell? You know the answer to that question if you do 5 minutes of work, or you ask me or Diane to do it for you for free for time and money. What is your current cash flow? Right? I'll do that too. What's your current cash flow? Hey, I've got a form on this QR code that my clients fill out, that your clients can fill out, and I'll do all of this for you. I do this for every client that I work with. What is your current cash on cash return? What do you make in a month actually? What do you make in a year actually on this property? And now all of a sudden I understand what they have, so I can reframe the relationship with the advice that I'm giving. And I'm not saying like, oh, you could make 4.5% in a, no, I'm saying, hey, today you told me that your income is necessary to maintain the life that you desire, that you need. And what would, imagine if, right, that's another Dan question, imagine if this particular property spun off 4 times as much income for you. Like, what would that do for you? Would that be important to you or a blessing to somebody else? These are all interesting questions that reframe the relationship as you understand. Somebody will always tell you the return on the rental property is way higher than it actually is, right? You could say, hey, I'd be happy to look at the Schedule E on your tax return, and I'll tell you exactly what your property is doing, right? Or we could back into it, right? And oftentimes backing into it is very, very accurate and pretty defensible. What are your short and long-term financial goals? Do you need this income? Do you need the principal, right? Are you the type of person who wants to bounce your last check on this earth, right? Spend all your money that you worked for and go on the cruise and buy the second home and do the things? Or are you focused on protecting your estate for your children? Are you charitably inclined, right? Do you participate in church? Like, where is your legacy from a financial standpoint headed? That dovetails into the estate plan. The intangibles, you're going to get this. Like, what are people afraid of? You're going to hear that, right, after the second or third conversation. What are people hopeful for? What are they unsure about? What do they hope for their kids? Right? It's a really, really important conversation that people are not having. So when would you bring JRW in potentially? So we partner with the real estate planner community really deeply. Just quickly raise your hand if I've partnered with you on a client. Okay? So a good amount of people in this room. Like, we will dig in to the client case with you. We'll make you guys look unbelievable. I work with other groups, okay, not just Keller. You guys have access to the right content, the right information. Like, if you're unsure about whether or not you're in the right room, like you are. If you want to materially change the lives of these people we're talking about. And if you believe that it's a population worth focusing on. Like, you're in the right room, this information, you're going to show up differently. So when can you bring us in? If you don't have a relationship with the client or the client's CPA and you feel like you're not getting there, right? I can have the conversation with them about their tax situation. Like, hey, can we book a strategy session with one of the financial professionals who works with our cohort or our community, and we'll just have a conversation about the implications of you selling, right? Now, all of a sudden, like, you're in control of that conversation, and they're not going back to the CPA, who's likely, no offense to the CPAs listening, about to retire, really busy, overworked, way too many clients, not thinking about strategy, just doing tax returns. Okay, like, you want to stay in control of the consultation, and I'll continue to make sure that you're there. If you're not quite comfortable having what percentage of your net worth is this, your income, how important is all of that conversation that Dan can do that the gal from Beverly Hills couldn't, okay, I can do that. That's every conversation within the first 25 minutes, I've got a very good understanding of the client's financial plan. If you're unsure about what the solution could be, right? How many times might you have dialed an investor or found out that there's an investment property and they'd say, well, I would sell, but I don't know what I would buy, right? So I can have that conversation. right? There's always 5 options. I can only do one of them, by the way, but I present all 5, right? And I can help you with the other 4. I have strategy sessions around due diligence. If we get to the point where they're interested in a DST, it's a conversation that you can be a part of. I do webinars on a quarterly basis with my due diligence team. For you and for your clients, they can always join those, or we can do that as a one-off. And then ultimately, a recommendation is only going to come when it's suitable and when it's timely, right? Otherwise, it's a strategy conversation. The goal of every conversation for me is to put the ball back in your court, just so you know. You're my client until your client's my client, right? So you engage with me, that's part of what you get for free with the real estate planner piece, right? Any of these strategy sessions are part of it. So strategy sessions, what do I do? Yeah, we'll just kind of go through the tax consequences. I'll outline. Asset performance test, I will run. What is your cap rate? What's your current cash on cash return? Right? What has your appreciation been? If you want me to run, what was the IRR for the last 47 years, right, of appreciation as well? We can do that. Investment planning goals, right? What is important for the client? So all 5 of these are strategy sessions that I would do with my clients that I'm happy to do with you, right? If your goal is to upgrade the asset class, why is that? Is it income-based? Is it protection of capital? Is it risk on? Is it risk off? Where are you in your investment journey? Right? Oftentimes people are looking to decrease risk, increase income, upgrade the tenant, and upgrade the asset class. Right? If they could have all 5 of those things, would that be a good thing? Yes, it would. So those are the boxes that I'm trying to check when I'm presenting a recommendation. Investment strategies. Here's the 5. Okay. So Billy, this is for you. You've got 1. So you can buy something local in the same asset class that's better for you. And here's why. Because I know my market, and there's actually this part of town where this is really where the rent to income is. This is the demand drivers, this employers over here, yada, yada, yada. All the reasons why it's the right place for renters to be, for you to maximize the single family rental market in your addressable area. Right? Hey, you own a property here. What if we just repositioned you over here? Right? You need to know everything about both of these to have that conversation with confidence, but you absolutely do. Local commercial property. You want to upgrade the tenant? You want to upgrade maybe the lease, which gives you some advantages? Well, how much equity do you have in your place? Right? Through a 1031 exchange, we could take all that equity and use it as a down payment on a bigger property. Right? There's an industrial complex on the other side of town that has tenants that are going to sign 5-year leases. Right? That's a lot better than your residential tenant. Right? We have to make sure that you're financeable, that you're lendable, right? That it's a risk that you want to take. We have to understand that. You guys are not going to sell that commercial property likely. Some of you might, but a lot of you will just send the referral to the best commercial agent that you know in that asset class, right? So that's a referral for you. How about cross-market? Okay, I grew up in Cleveland, Ohio. I live in Los Angeles. Right? A lot of LA people are Cleveland, Ohio investors. Why is that? You can buy a house for $150,000. Right? You can't buy anything for $150,000 in LA. Right? So I can pick up the phone and I can call somebody in Cleveland or somebody in Columbus or somebody in Knoxville, Tennessee or Atlanta, Georgia, right? And say, hey, Tanya, I have an investor that's looking to buy in Atlanta, right? That's a referral for both of us, right? That's a good way to grow your business and serve the client. And then there's the DST, right? You can upgrade the tenant, you can upgrade the income, you can decrease the risk, you can do all this stuff, right? And it's a conversation with me that perhaps gets them to the point where they're going to list and if they wouldn't otherwise, right? Or more and more and more, what you'll find out is that they know about the DST already, and they're waiting for a listing agent or broker to talk that talk or have that conversation. So real quick, this is not an advertisement for a DST, but let me help you understand what it is. Okay, so Delaware Statutory Trust is an investment vehicle, and there's classes on this in the library, and we've talked about this a ton. It's an investment vehicle that allows an investor through a 1031 exchange to own fractional interest in a property or in a portfolio of properties. So now you've disconnected the equity that you have, the capital that you have in your 1031 for the type of property you can buy. So with $150,000 in Los Angeles, I could buy fractional interest in a $43 million Amazon distribution center. It's the same return as if I bought the whole thing, $42 million bucks, right? But I just own the little sliver of it, right? So I'm not pitching you on all of the DST stuff. There's tons of content in the classes on that. But it's a conversation that you can have with confidence to get somebody to the point where, oh, that's interesting, right? The last strategy is the do nothing strategy, right? And you can model that as well, right? That's the asset performance test. Okay, the do nothing strategy is this, and let me just show you how this plays out, right? You need to be prepared for the expenses that are going to come. Insurance is rising. I need you to take more into reserves than you currently are today, right? What does your estate plan look like? The trust, now it's a referral to your trust attorney of choice, right? And it reinforces that relationship, right? The do nothing strategy is still fine, right? But it's embedded in all of the things that we're talking about, showing your value and cross-pollinating referrals. The DST due diligence is a strategy session that I will lead with your client, or it's what I lead with my clients all the time. And what do I care about when I look at an Amazon or whatever the property is? What is the price that my investor's paying relative to the cost or the comps, right? What if it's a market where there's a lot of development? I want to know, what does it cost to replace this, right? It's an apartment building. If I'm going to buy it for $92 million and it would cost me $110 million to build it in that market, that's a decent buy, right? Or if the comps come in at, hey, the comps are $100 million bucks, and this is a $92 million price to my investor, it's a great deal. If it's a $120 million price to the investor, same great location and same great amenity package, same great all the things, is that a good deal? No, right? So really important. 2 is operating forecast. What do I care about? I care about the durability of the income. What do my clients care about? The income they put in their pocket. So that's the gross revenue and the net expenses, right? So I can look at revenue drivers like occupancy, rent per square foot, right? I can look at the comps in the area, right? I can look at where demand is coming. Is the top line have pressure to go down, or are there tailwinds to push it up? What about expenses? Is there a tax abatement that's coming due in 3 years? It's going to reset the property tax basis. Right? What are the things that are going to change expenses on this that I need to be aware of? And then lastly, it's the exit strategy. There's a lot of DSTs today, 50% of the market puts your client directly into a REIT, a real estate investment trust. It's absolutely the right thing for some people sometimes, and it's absolutely the wrong thing for a lot of people a lot of the times. Right? And so the exit strategy is really important. So I would prefer that you not go down the DST rabbit hole too far. I think what you need to know is you upgrade the asset class, you upgrade the tenant, you can increase your income, you can decrease your risk. Do you want to have a strategy session? What is it? Which days of the week? Thursday or Friday? Better for you, right? So book that and have that conversation. I'm pleased to bring up my friend Diane Cook from Deferred. Deferred is a qualified intermediary. Yeah, give her a hand. Deferred is a qualified intermediary. She'll kind of give overview on background, but they're relatively new to the game, so to speak, which is the advantage. When I refer my clients to Diane or her counterparts at Deferred, the exchange officers, I usually say a few things. I say, JRW completes 500 or 600 1031 exchanges a year. Okay, we've worked with just about everybody in the qualified intermediary space. I refer to Deferred because of their exchange officer's level of customer service. What matters to me is that I'm finding partners like Dan Ihara and like Diane Cook who put their clients first and who care about the people behind the transactions. And they have a really unique model, which looks on the marketing platform like a lot of things, but what it actually means is that they have more time to spend with the clients. Just one case study for Diane, and then you can talk about whatever you want. But Diane called me at 7:45 p.m. I was having dinner with my family in California. Diane lives in Atlanta. So what time was that for you? 10:45. And she said, hey, I haven't gotten your client's ID letter, and today's the 45th day. And we had talked to the client all day. Like there was a long, active conversation with the client. And she called me like I mean, I would have been asleep, right? It's like, it's not her problem. But she's like, it is my problem. So she called me and we got it figured out at the 11th hour, because I would have never known. If I worked with a typical QI, it would have got lost in the shuffle and a million different people and parts and a cog in the wheel, and nobody would have called me at my house at 7:45 on my cell phone, right? So, like, that's a legitimately 7-figure tax problem if she doesn't call me for the client. And so, highest confidence in Diane and her team. With that, you can take time to do whatever you want.
Thank you. So I don't have any slides, so I'm talking off the cuff. So I'm just going to talk to you. So I'm with Deferred. Deferred is it's a new company, and we acquired an old company and rebranded it. And what makes us unique from other 1031 exchange companies is we don't charge a fee. That's the biggest thing. And we don't charge a fee because we're transparent in how QIs make money, basically. We still make money. We don't work for free. We just don't charge additional fees. And we're, I think our biggest thing that makes us unique is what we care about most is the same thing Dan cares about, which is serving the clients. So money's not really, I mean, we make enough money, we don't have to worry about it. But our goal is to hold the hands of the clients going through this process. So generally, it's really interesting because generally when somebody calls or goes to our website and signs up and makes an appointment with us, we spend a lot of time on the front end with them. And I was the first exchange officer, and I drive this into the new exchange officers. This is our job. Paperwork will take care of itself. But we spend a lot of time on the front end with your clients, talking to them about what their goals are and whatnot. But most of the people that we get in touch with us find us on Google, which means we get some referrals from this group and other groups, but it's odd that we don't get more because most of our clients already are working with a realtor. So they already have their property listed, but they generally don't know what they want to do. So, you know, I know I'm selling. A lot of them are older. They have to sell, or they've gone through the process of learning that they need to sell. But a lot of times they're like, I don't want to be a landlord anymore. I don't know what my options are. I've heard about something that's called some DTS something. I don't know what it is. And I always say, I got a guy, and it's always John. So we just work with them on, okay, now you have this issue, we're here to help you. We're also here to help you. So we get I talk to realtors all the time, and I will spend as much time as you need explaining the process, explaining the options. I'm never going to charge you, I'm never going to charge them, even if they don't do an exchange. It doesn't matter to me. But 1031 exchanges is a great way to build wealth. So it's not necessarily, I don't want to pay tax, even though they won't generally have to pay tax. It is, what can I do with this tax money that I would have to pay, and make it something that my heirs are going to have down the road. So that's the purpose of 1031, is not so much, I don't want to pay the government money, but how can I grow my estate for my kids? So generally just kind of I'm not going to tell you the process of 1031 because I know you probably know. If you don't know, call me and I'll walk through it with you. But generally we have this intake call at the beginning, and the things that we've tried to find out are, we go through the whole, how long have you owned the property? What did you pay for it when you bought it? Because I need to know what the tax basis is to know that a 1031 is going to be beneficial. So there are calls that I have with clients, and I'll say, you're not going to defer any tax by doing this. Or they'll say, I want to sell this property. I'm going to sell it for $1 million. I want to reinvest $500,000, but I want to keep $500,000 because I want to, go to Bermuda or whatever. But their basis is, they're not spending above their basis. So even if they think they're gonna reinvest them and defer some of the tax, they're not gonna defer any tax. And so my job is to say, you know, good luck to you, but this isn't the vehicle that you need. You need to go a different route. If we determine that, yes, 1031 exchange is valid, there's a lot of times it's not valid, so you can't exchange a second vacation home that you don't rent out. You can't exchange flipped properties, stuff like that. So there are limitations on what can be exchanged. If we determine their property qualifies for exchange, then the next question is, what's your goal? You know, what do you want to do? Do you want to be a landlord? Do you want to get out of that asset class? Do you want to be a landlord and also have something passive? Because you can do that too. And so we spend a lot of time going through, not telling them this is what you should do, but what is it that what's your goal? Do you want to have property where your grandkids are? You know, do you want to rent them property, whatever? So really good vehicle. Our company is very accessible. We've got exchange officers all over the country. I'm in Atlanta. We've got, West Coast, East Coast, everywhere. But anytime you guys have questions, you call me. I'll walk through this with you about your clients. Oftentimes, if I get a referral from a realtor, I will talk through the process with you, but I always will say, we're going to have the same call with your client. So, you can get them on the phone now. We can schedule something later. But we're a really good resource to kind of walk through that process with you. This QR code that John has in his slides is really great because this breaks down the tax stuff if you guys don't want to do it. It's an automatic little tool that you can kind of just talk them through, and then you're not giving them the tax advice. We're not really giving them tax advice either. We're just doing the calculation. Any questions about any of that real quick? I think we're going to do questions at the end.
Yeah, you stay up here.
Okay.
We'll try to get practical.
Okay.
And I'll see if I can't generate some dialogue with that,
Okay.
with this slide. So, as you guys are listening to this, so Billy had a great one, and I'm going to keep picking on her because that's the only one we've had so far. But if you have issues with investor conversations, I'd be curious to know where you're running into roadblocks, from identifying the investor who's in that senior population who doesn't want to list with you or who doesn't want to list today. So be interesting to see. Barry, you had your hand up. If different topic, that's fine.
I had a sort of two-point question. One was I was going to ask you just to extrapolate a little bit more about, because I just made a note of exit strategy, and then 3 seconds later you brought it up.
Yeah.
Because I want to know what's forever and what's strategy. Obviously, if they're still alive or if they pass, how to end the domino.
Yeah.
And then, you touch on the 4 points that we always touch on whenever we're training, mentoring agents, whatever. And that's to go from unconsciously incompetent to consciously incompetent to consciously competent to unconsciously competent.
Yeah. Okay.
Somewhere along that stage, there's no way that we can have that knowledge unless we do what you guys do for a living. So the consultation call is the key. And again, bringing in an outside resource doesn't take you out of the transaction. It puts you in the transaction by bringing in professionals. But I would love to know the metrics, because I think most people that are in a 1031 situation fall into one or two, and I'd love to comment. You're either aggressively pursuing it and looking for you to identify the properties, or they're thinking, is this a strategy? And I find that probably 70% of the people that know the word 1031 have no idea what a DSD is or an option.
Sure.
Their
Right.
brain goes 1031.
Yeah.
So they don't seem to understand the options, and being able to say, let me bring in key people so that you can understand the difference.
Yeah. I'd be,
Validates you.
I'd be curious, Diane, to tee you up for that, because you're not a DST person, just like they're not a DST person. So what do you hear? Oh gosh, what do you hear a client say? I almost went down. What do you hear a client say,
That would have been so bad.
and how do you bring me in?
Yeah, so generally, so if somebody has found us on the Google, generally their thought process is I'm selling this thing. I've heard somewhere around, that maybe I don't have to pay the tax if I do a thing. And yeah, and they don't really know what they're going to buy, but also they're Googling options of things you can buy, and they run into this DST thing. So during our conversation, so I always ask, do you already know what you're buying? Do you already know, what you have in mind? If they say yes, cool, we just go with that. If they don't, though, I always run through it. Okay, you can buy anything that's real estate. It can be residential property, it can be land, it can be, whatever, I list them, or it can be a DST. What's a DST? Well, it's where you buy a little fractional part of some larger project with a lot of investors. How do I find out about that? I've got a guy.
And they probably asked you a bunch more questions, and at some point you're just like, hey, I'm not the,
Yeah.
You don't have to know all the things.
Yeah, and
But-
I really do not go much deeper than that on DSTs, because I am not the DST expert. I am the 1031 exchange expert.
Yeah.
And I know with confidence, if they talk to John, he's going to break it down the way you guys have been trained to break it down. It's amazing.
Barry, to answer one of your questions specifically, when I go through the suitability conversation, I'll tell people this. A DST, a Delaware Statutory Trust, is a wonderful structure for some people, but not everybody. And some of the deals are great, some of them are not. Right? So those are the two sides that I bring the most value. Are you the somebody that it's best for? One of the conversations or the questions I ask is, do you expect to spend this money during your lifetime? Do you have a plan for this money during your lifetime? Do you have a plan to reinvest this money already, right? Because a Delaware Statutory Trust, one of the biggest downsides from my perspective is that it's illiquid, right? You've bought real estate that you don't control. And the last thing that happens with that real estate that you don't control is they sell the property and return the capital back to investors through another 1031 exchange opportunity 5 to 7 years from now. So 5 to 7 years is a pretty quick flip for a commercial property, but it feels like a long time if people are like, I want to spend it, or I need it, or I might need it. I need access to it. And if they say that, I'm very quick to say, then this is not right for you. Right? Or just like Diane said, what happens a lot is they'll say, well, I'm going to peel off $300,000 because I think that's my basis, that's my principle, so I'm just going to take that off. It's like, actually, if you need the 300, you shouldn't do the exchange at all, because that whole 300, it's all capital gains until you get to your basis, and then it's all basis. So that conversation it's a dialogue for sure, and it's never a recommendation until you go through that, the entire process. Yeah, Andy.
When do you have the discussion about them being a qualified investor?
Good question. This comes up a lot in this group. So the accredited investor question is what he's asking. In order to participate in a Delaware Statutory Trust, it's a non-traded security offered by a financial advisor, a registered representative, and the investor needs to be accredited. Okay, so I had this conversation with somebody sent me yesterday from your team. Went through the conversation, and it was, okay, what is this? It's a $90,000 equity transaction. I need to replace $150,000. What's your basis? Okay, about a third of it's going to be taxes. Okay, there's a tax need. What's your financial? Do you need the money? Is it liquid? The financial plan. Oh, hey, this cash flow that I would offer would be an enhancement. Okay, check. Good, understood. We kind of go down macro. Okay, good. Get all the way to the bottom. It's like, if you were to go down the DST route, I know what I would recommend. I know the whole market, and I know you enough to know what would be a fit. But what I don't know is if the structure is a fit. So tell me, this $150,000 house, is this one of one, or do you have multiple? Oh, I actually have another home that I used to live in, but now I rent it out. Okay, well, what's that house worth? That's about 450,000. Do you have a loan on that? Yeah, about 50 grand. So in my mind, it's like, okay, 100 grand in this house, 500 or 400 over here, so she's at 500. Like, hey, what about retirement accounts? Like, I'm just trying to understand the risk that we're taking here. You know, is this 100,000, let's call it, is this like 10% of your everything? Or is it like, you know, 50% of your everything? You know, and she's like, well, you know, I probably have another 150 or 200 in retirement. So now I'm like, uh-oh, we're not at the million. And so then I'm walking that line of saying, well, here's from an advisory standpoint, I would have a difficult time recommending this to you because I think it represents too great a risk for your balance sheet today. And actually the SEC has this provision that I need to fall under. I don't make them feel bad is the point, and I don't ask them if they are. Like, it's awkward. So I'll go through the financial planning conversation like I would anyways, and it always comes up. And if it's not that, you know what I do? Hey, I know Keller Williams, a real estate planner in Cleveland, Ohio, who can sell you a $150,000 home. Do you want an introduction? I know somebody in Mobile, Alabama. I know someone in Knoxville, Tennessee. I know somebody in Austin, Texas, or wherever $150,000 homes are. And now that's a referral out. Yeah. 10 minutes, that we said? Okay, yeah.
And just to, because I don't think you really covered it, what is an accredited?
$1 million. That's the mark, right? You got to have $1 million net outside of the home that you live in to qualify as the accredited investor. Almost every senior adult real estate investor is accredited, right? It's that conversation was, I think it was on behalf of a 45, 50-year-old gal who's interested in knowing more. And she was not offended. She was not embarrassed. She was happy to have learned. And she's like, oh, well, my parents might be. And it's a good conversation. And it was a good opportunity for me to reinforce her relationship with deferred, right? And to promote their value. And that's the same thing I would do with you. Be like, hey, have a conversation with John. You got questions? Fine, cool. Right? And then I would circle back with you and say, hey, here's the deal. You know, you're going to need to look for a cross-market referral opportunity if we're really going to defer the tax. Right? It's a partnership in that conversation.
And she'll be accredited later.
And she will be later, yeah, for sure. She's like, it ended up, we did the backwards math. She's like, I need $120,000 more dollars. Like, hey, you're almost there. You know? So, yeah.
How do you work with foreign investors?
Yeah, so the property has to be in the U.S. and they have to be a U.S. taxpayer. So I have, in Los Angeles, we have at times Chinese investors who own real estate in L.A. They have an EIN. Either it's a corporation or it's a personal EIN, and that's a 1031 exchange, but they have to buy in the U.S., right? So they can't, it's difficult. What I say is you may have a different answer for me, but you can't do a 1031 exchange from a U.S. property into an international property, but we should let the expert answer that question.
That's correct.
Yeah.
You can do international to international, but we don't, because who would want to do that? And but yeah, 1031, it has to be U.S. property. Yeah.
It can be U.S. territories,
Yeah.
right? Okay.
Yeah,
But
within-
oddly, not Puerto Rico.
Yeah, I was going to say there's nuances, because we ran into that.
Yeah.
Yeah.
Talking about that.
Yeah,
Yeah.
for sure. I'll come back to you, Barry. Next one, yeah.
You were asking for objections, so I had
Yeah.
a conversation with a guy across the street that I know owns the house but doesn't live there.
Yep.
And he said, I've gotten your letters, Carl, but I'm just not interested. So I asked him if you could, would you?
Yeah.
Question. And it came down to just him kind of keep pushing it off, like, well, you know, I'm gonna let he doesn't have kids of his own, I'm gonna let my heirs
Yeah.
get over it when I'm gone. It's in a trust anyway, Carl. And we were just moments on the street. Is there something you would say that makes
Yeah, I mean, you are in the business of solving problems and creating opportunities. And I tell clients all the time, if you don't have a problem to solve, like, we're just hanging out, you know, talking as friends. I'm happy to tell you what I do. But if you have a problem to solve, like, how is that property working for you? Do you know the cap rate? Then you shut up. And they're like, what's cap rate? Do you know, like, if you were to rely on that income every month, do you know how much you'd have after all the expenses? You ever had a big year where there was a lot of expenses? Did you ever have a scenario in which that tenant left? If that tenant leaves, do you think you'd get more for the next tenant to come in? Now you know, is it below market or above, right? So you kind of are framing this up. And then first you have to understand what they have, right? So you have to do that.
I already looked at his tax records. I know how many, he's got several properties.
No, but you got to know what that property is doing for him, and does it comp? Is that property competitive amongst its peers? And of the 5 other things he could be doing, including the do nothing, right? Does he know about the other 4? Hey, did you know you could? You have enough equity in your house, you could. Right? Hey, I've got a guy who's in this market that's doing awesome, you know. But if you don't know they're making $1,000 a month and you can make them $5,000 a month, like that's a fun conversation. But you have to know what they have to know if is there an opportunity or is there a problem. And if there's not, it's like you're a great investor, but you're not going to find a ton of 70-year-old great investors, like of single-family homes, certainly. There's going to be a problem or an opportunity that you can win.
I mean, I literally was on my bike and he was literally just checking
Yeah.
the property. What could I have said to maybe say, you know, this isn't a great time? Maybe, I just feel like I dropped the ball with you.
Well, I mean, again, you could have probably said 1,000 different things. What I would sometimes say in a conversation like that, if you want to keep it going, is I'm interested in single-family rentals in this area. Like, what is your cap rate on this? I'm curious because I'm looking a few different places, right? Or I've got investors who are pursuing 1031 exchanges into homes like this. I'm just interested to know what is your cap rate? What is your cash flow, right? Oh, if it's awesome, if it's 10%, it's like I could sell that tomorrow, right? If it's 1%, it's like I could get you into something better, right? So whatever it is, it's humility and curiosity to understand more about what they have because they don't understand it as well as you can help them understand it, right?
Those are great questions. Thank you.
John, I love what you said about we're just talking or just hanging out if you don't have a problem to solve. But I was just curious from your point of view, what objections have you seen commonly pop up and the best ways to handle that you already haven't discussed?
Let's do Billy's. I was wanted to pick on her this whole time.
It is a good one.
Yeah.
I can tell you more about
Bet-
that property. and
well,
you would go crazy.
There's nuance to everything, but you're going to find this is a big category. Best property I've ever bought. Okay, fun conversation. Our first property, best property, hardest property. Okay, how's this property working for you? You got the cap rate conversation. You understand the taxable events. Like, oh man, it'd be tough to sell it because of the tax consequence, right? If you could make 5 times as much income or 4 times or 3 times or whatever it is, would you be interested in considering increasing your income? Is income goal important for you? Do you think that the appreciation in this home is going to continue in the same pattern that it has for the last 10 years? Or do you think this market's flattened off? You already know the answer because you know the market. Eventually, you're going to get to the point where it's like, look, I got a big tax bill. I know that when I die, my kids are going to inherit it. Right now, all of a sudden, it's like, do you have a trust? If not, I've got a great person for you. Right? If you do, great. How many children do you have? Dan would then ask the next question, which one is your favorite, right? Okay, have you had the conversation with your children about the division of your estate? Did you ever inherit anything from your parents? How did that go? Have you heard, how about your friends? Have any of your friends passed away, if depending on how old they are? Or have they inherited anything from their parents? Here's what I see as a real estate planner, is that most people don't have a plan. And the unfortunate part about that is that you can't split a house apart. If you don't have a trust, let me tell you about probate. If you have a trust and you haven't had the conversation with your kids, let me tell you how that goes when you're not here anymore, right? And if you could treat your real estate like you treat your stocks and bonds, right, your equities portfolio where everybody gets their pro rata share, would that be a benefit to the relationship that your children would have with one another? Because did you know that if your children inherit, if you have more than one child, and they inherit through a trust, you have just put your kids in business together. They run a business together called an irrevocable trust. And that irrevocable trust now has to make decisions. Do we re-tenant the property? Do we sell the property? Do we need to fund the property with outside cash? Like, you know, are all of the children in the same economic circumstance? Are your children in the same geographic location? Do they get along? Do they talk to each other? Right? Because the solution that I provide is a path toward independence from each child and each family, and also a path toward, if they're philanthropically inclined, breaking that estate off into church or charity, which I always bring up. Right? They can do whatever they want through the estate, but the real estate asset is a hard one to break apart. The DST is infinitely divisible. That's not why you should do it, but they should know about it. Right? It's one of the things they should say no to along the way. think we got like 2 minutes left, maybe.
I have another
Yeah.
quick question. To get in front of the majority of the senior community, you find, because you mentioned prop stream, you find like hard letters work best, or telephone calls, or what would
I'll let Dan you can answer this in the next session. We get a lot of people kicking the tires because we are experts in something. And then we have to talk about all the other things, right? If you're an expert in protecting, building, protecting, and transitioning, or transferring generational wealth, if that's your thing, like that's why people want to know you have the answer to how do we do this thing that we've heard about, right? And now, again, this conversation is how do you maximize the sphere that you already have, right? You have more listings inside of your database than you think. And if you need to go outside of that, the prop frame stuff is pretty interesting.
Yeah, quick question from Zoom. Kathy Crouch said she had an estate attorney. She's in Plano, Texas, Dallas area. Said that they can't do a DST. Are they special, or does he just not know, or do you have any insight on that?
Can't. The only can't would be it's not an accredited investor, likely, but that's a great conversation. Do you want to do a DST? Why do you want to? What goals are you looking to achieve? Do you think that would be better for you? Would you like to talk to somebody about that? Can I set up an appointment? Like that would be a fun conversation to have. Let me run through what I present to an investor. So this is, if you're not a part of the class, next slide, KB. If you're not a part of the class, you may not know how to do this. If you are a part of the class, you can do this on your own. If you don't have time or don't want to or feel uncomfortable, I can do it for you. Diane has a QR code. She can do it for you. Okay, so there's no excuse. You heard her say, and you heard me say, and you heard Dan say, taxes are important to understand at a high level. Okay, you can't skip this part. So I can say, hey, did you know that if you sold, after all of your taxes, you'd pay $154,000? How many months of rental income does it take you to generate $154,000 of profit? How many years would that take? It's a lot of money to make. Is it a lot of money to lose? Is it important? So I go back to, that's an important problem for somebody to solve. Maybe it's not important for everybody. But if I don't know the number, I don't know what I'm talking about. And neither do they. And they should feel that. The last thing is, here's a case study of the end result of a conversation. This was a client that Diane and I worked on together. This is what you can control if you understand what they currently have. Here's the current value, current gross rent, property tax, really high in California, insurance, probably an estimate on my part. It's probably too low. It's probably conservative. Property management is always, for me, it's 10% of gross rent for a single-family home. Maintenance is half a month's rent minimum. And vacancy and leasing is half a month's rent minimum, right? So you can frame up some assumptions, and you can put this together and say, well, your net operating income is $18,000 a year. Your cap rate's 2.57. So when I show you a 5, what I'm actually showing you is not a 5. I'm showing you like $34,000. I'm not showing you a 5. I'm showing you 38. Never mind. It's right here. So 38,000. So it's 2.07 more. So now you're having the conversation with tangible realities. And you can do this with the commercial property. You can do this with the Ohio investment property. You can do this with the property across the street in your local market. I suggest that you get really comfortable having conversations around what do you currently have and what could you own, right? That's where I would go with your neighbor. Hey, I'm part of a real estate planner group. We do this thing called a, what do you call it? Asset performance test. And I am trying to look for real life examples. Can I do an asset performance test for you for free on your property? I'd love to head check whether or not what I come up with is your reality. Sure. Yeah, let's do it. Right? You're giving away a tremendous value kind of for free, right? So let's see. Role play? Nope, no time for that. We kind of did that already. Thank you.